There's one stock that super investors have been buying like mad this most recent quarter.
Large investors have all put their money into this single stock. In total, they invested $5 billion of capital. These investors include Warren Buffett, Michael Burry, David Tepper, and many others.
When Warren Buffett buys something, it's normally a good sign, and when 9 other super investors buy it too, we should probably pay attention. In this video, we'll show you what this stock is and the other 6 most bought stocks by super investors. Are they a buy for us today? We'll start with the stock that was bought the 7th most time by super investors. It's Berkshire Hathaway. Berkshire Hathaway was bought by Bill Gates, Christopher Bloomstrand, and Francois Roshan of Giverny Capital. Obviously, the biggest name here is Gates, so it's interesting to see Gates buying the stock even at these price levels. It's been one of those stocks that has really gone up in terms of price, and Gates has always considered himself a value investor, but he still obviously sees value even at these current prices. The 6th most popular buy was a stock, you may have heard of it, it's called Nvidia. Probably the biggest name out of these super investors who bought Nvidia is David Tepper from Appaloosa Management, where he increased his position by a lot, 480%. Coincidentally, Nvidia now has a bigger market than all of Big Pharma combined. So the size of this company is ridiculous. I remember when Apple first broke the 1 trillion mark and everyone thought that wasn't possible. Nvidia is on track to break the 5 trillion mark. It's interesting to see Nvidia in a sense now becoming a part investing company. They invested recently $100 billion into OpenAI to deploy at least 10 gigawatts of Nvidia systems for OpenAI's next generation AI infrastructure to train and run their new models. Nvidia also invested $5 billion into Intel recently, and they own investments in Applied Digital, ARM, CoreWeave, Nebius Group, Recursion Pharmaceuticals, and WeRide. So Nvidia are making a lot of money selling their chips, but they're not playing around. They are investing it and making strategic investments with the cash flow. Many investors love this and love the underlying company. However, others worry that this may be the next Cisco stock. For those who don't know, at the height of the dot-com crash, Cisco was the most valuable company. Today, in the AI boom, what's the most valuable company? Nvidia. And do you know what happened to Cisco stock? It crashed and is still yet to recover to the price that it sold for in 2000. Not saying it will happen with Nvidia, but it's something we need to be aware of. The next stock that super investors have been buying up this most recent quarter is Meta. The interesting thing about Meta is it's actually the cheapest Mag 7 stock that is available right now, at least on a PE ratio. Tesla's PE is 229, Nvidia is 52, Microsoft is 38, Apple was 38 too, Amazon is 33, Google is 25.9, and Meta is 25.2. And then the other thing that people forget about Meta is they've just been a cash flow generating machine. Revenue, they have grown from 40 billion to 160 billion, and profit they grew from 15 to 60 billion. So their business, online advertising, is just massive in terms of cash spending, and Meta are on the right side of that equation. And yeah, obviously we know that Zuckerberg has been spending money like mad trying to develop these AI glasses and the metaverse, but don't forget he's got that great underlying social media business that consistently brings in money. Social media, I don't see it going away. Just look at everyone. They're basically addicted to it, and companies will always pay decent money for the most important commodity, people's attention. Meta is a company that dominates in the space alongside Google and maybe Netflix too. Okay, we are working our way towards the stock that these super investors have bought the most this recent quarter. Stock 2 and stock 1 were bought more than double as often as the other ones. We're going to get into them soon. But stock 4 is Microsoft. So Microsoft you can find under the ticker symbol MSFT, and the stock itself has done really well the past couple of years. Don't forget that just 5 years ago they were selling for $200 a share. Today their price is $500. So at this price it makes them a $3.9 trillion market cap company. And we have investors like Dan Ives saying that this stock is going to $5 trillion.
When I look at Azure and where they are in AI, I mean that's why I believe Microsoft is trending toward a $5 trillion market cap. That's the one to me this quarter.
And there's a few reasons why analysts like him are so bullish on the company. One of the core reasons is the AI play behind Microsoft. Microsoft's AI strategy is not just about owning one element in AI, but owning the entire stack, from the chips powering the AI models to the cloud infrastructure hosting them, all the way down to the apps that people use on a day-to-day basis. Microsoft wants Azure, their cloud platform, to be the go-to platform for running AI. Every startup and enterprise that trains trains or hosts models on Azure will rely on them for their AI systems. While Microsoft is heavily invested in OpenAI, they're also developing their own large language models, like the upcoming MAI-1. Microsoft, they're creating their own custom AI chips. They're trying to put AI in every one of their products, from Office to GitHub to Windows to Teams. So this way, their software will become part AI assistants too, which is a game changer. And if you think about Microsoft historically, they have a good track record of adapting with the times. They got into gaming early with creating Xbox. They switched their core business from selling one-off in-store purchases to getting recurring revenue with subscriptions. And they built their own cloud computing system, which is now extremely profitable. These are just some of the reasons why you have these super investors buying up the stock. Moving on to the third most bought stock by super investors, and that is Amazon. Bill Ackman's been buying it, Value Capital's been buying it, and a few other big names. Amazon, they have a two-pronged attack when it comes to business, and I'm going to let Buffett explain those two.
I made a statement the other day, which it's really remarkable, and I was asked Charlie whether he could think of a situation like it, where one person has built an extraordinary economic machine in two really pretty different industries almost simultaneously, from a standing start as there with competitors with lots of capital and everything else, to do it in retailing and to do it with the cloud like Jeff Bezos has done. But he has been in effect the CEO simultaneously of two businesses starting from scratch. If Andy Grove Intel used to say, think about if you had a silver bullet and you could shoot it and get rid of one of your competitors, who would it be? Well, I think that both in the cloud and in retail, there are a lot of people that would aim that silver bullet at Jeff. So it's a remarkable business achievement where he's been involved actually in the execution, not just bankrolling it, of two businesses that are probably as feared by their competitors almost as any you can find.
Jeff Bezos is a different species.
And we missed it entirely, incidentally. We never owned a share of Amazon.
Yep, so let's take a look at the stock now. It's retailing for a price of $215, up from a price of $85 that it was selling for in 2023. And you can notice how the price tends to follow the direction that net income goes. And a lot of stocks will follow this pattern because algorithms and hedge funds, often all they care about is net income. They don't care if you had a one-off non-operating loss on an EV company that you own, like Amazon did. If the net income's down, then you'll often see the price follow. This can be an opportunity, just like it was with Meta in late 2022 or Netflix in mid 22. Netflix, they had that drop in net income and the market hated them for it. The reality is with Amazon, they are one of the best companies at understanding what will occur in the future, preparing for that, and then profiting in the later years. The reason why they make so much revenue now and also making good profitable years is because 20 years ago, they knew e-commerce was the future and they prepared. They knew the cloud was going to be vital to the world and they built systems. Amazon are doing the exact same with AI today. AI is going to change the world. We all know it. So they're building systems to prepare for that world. Okay, so this is a big stock. Just to put it into perspective, super investors bought Google more than double the amounts that they bought Amazon this recent quarter. You know, Google has had an amazing couple of decades, from when Larry and Sergey Brin first created the Google search engine, to launching Gmail, to acquiring YouTube, great investment, to starting Chrome, to some more modern day things like developing Gemini and buying Wiz, the cloud security platform. But of course, the big talk with Google is ChatGPT. And the question, if it's going to be the new search engine and replace Google, which of course is a legitimate question. But it hasn't happened yet. In fact, things have been going pretty well for Google search. Look at their sales. We have not seen any sign of them slowing down. It seems like year in, year out, they just grow and generate cash flow. And as of the most recent financial year, they generated a record profit of $100 billion. That's more profit than Nvidia, more profitable than Warren Buffett's Berkshire Hathaway, above the profit of Apple, almost double the profit of Amazon, and 14 times more profit than Tesla. When it comes to generating underlying net income, they are one of the best companies in the world at doing this. This is why Charlie Munger used to speak so highly of them, because of the quality underlying business.
We avoided tech stocks because we felt we had no advantage there and other people did. And I think that's a good idea, not to play where the other people are better. But you know, if you ask me in retrospect, what was our worst mistake in the tech field? I think we were smart enough to figure out Google. Those ads worked so much better in the early days than anything else.
We were their customer very early on with Geico, for example, and we saw, I don't These figures are way out of date, but I remember, we were paying them $10 or $11 a click or something like that. And anytime you're paying somebody 10 or 11 bucks every time somebody just punches a little thing where you've got no cost at all, that's a good business unless somebody's going to take it away from you. And you've never seen a business, almost never seen a business like it. And I think for LASIK surgery and things like that, I think the figures were, 60 or 70 bucks a click with no incremental. No cost. So, and I knew the guys. I mean, they actually designed their prospectus. They came to see me, and a little bit after the original one, when they went public, a little bit after Berkshire even. And so I had plenty of ways to ask questions or anything of the sort and educate myself, but I blew it.
So that's Munger and Buffett saying how they blew buying the stock 20 or so years ago. But the thing that we really care about is not 20 years ago, it's today. Is Google still worth buying today? Well, one investor who is buying is Bill Ackman. And let's talk about some of those reasons why. First, you have Google Gemini. Google Gemini is a smart AI that can read, write, make pictures, and work with sound and video. And it has been taking more of the generative AI traffic share from companies like ChatGPT. Last year, they controlled 6.5% of the market share, and ChatGPT basically had it all. But now, Gemini has gained to 13.7% of the market. Google's big advantage is that everyone uses the search engine right now. So they can use AI, use Gemini, and they can spread it to their existing market very easily. It's like if you have a preacher and you get big audiences, well, you can easily sell your new book. But if you have no audience, you're gonna struggle to sell the new book. That's one reason why Google's AI picture could look bright. They also have their cloud business, Google Cloud, which is a really great business. This graph, it shows their cloud platform revenue. And yeah, not much to say on that. When you think 5-10 years into the future, this revenue figure will be a lot bigger because cloud is going absolutely nowhere. And Bill Ackman also has a few different reasons why he likes the stock so much. So I'll let you listen.
It's a business we've admired as a firm for 15 years, but rarely got to a price that we felt we could own it because, again, the expectations were so high and price really matters. And really the sort of AI scare, I would call it. Microsoft comes out with ChatGPT. They do an amazing demonstration. People are like, this most incredible product. And Google, which had been working on AI even earlier, obviously than Microsoft. Microsoft was behind in AI. That was really their ChatGPT deal that gave them a kind of a market presence. And then Google does this fairly disastrous demonstration of art. And the world says, oh my God, Google's fallen behind in AI. AI is the future. Stock gets crushed. Google gets to a price around 15 times earnings, which for a business of this quality is an extremely, extremely low price. And our view on Google, one way to think about it, when a business becomes a verb, that's usually a pretty good sign about the moat around the business. So, you open your computer and you open your search, and very high percentage of the world starts with a Google, page in a one line where you type in your search. Google advertising search YouTube franchise is one of the most dominant franchises in the world. Very difficult to disrupt, extremely profitable. The world is moving from offline advertising to online advertising, and that trend, I think, continues. Now, AI, of course, is a risk. If all of a sudden people start searching or asking questions of ChatGPT and don't start with the Google search bar, that's a risk to the company. And so our view, based on work we had done and talked to industry experts, is that Google, anything had, by virtue of the investment they've made, the time, the energy that people put into it, we felt their AI capabilities were, if anything, potentially greater than Microsoft ChatGPT, and that the market had overreacted. And they also have huge advantages by virtue. You think of all the data Google has, like the search data, all the various applications, email and otherwise, and the kind of the Google suite of products. It's an incredible data set. So they have more training data than pretty much any company in the world. They have incredible engineers. They have enormous financial resources. So that was kind of the bet. And we still think it's probably the cheapest of the big 7 companies in terms of the price you're paying for the business relative to its current earnings. Got a cloud business that's growing very rapidly, but they're investing basically 100% of the profits from that business in growth. So you're in that earnings number, you're not seeing any earnings from the cloud business, and they're one of the top cloud players. So very interesting, generally well-managed company with incredible assets and resources and dominance, and it has no debt. It's got a ton of cash.
Google indeed has a ton of cash. Just look at the stock on Forecaster, who are the sponsor of today's video. Click on fundamentals, go to balance sheet, and you can see they have a cheeky $95 billion of cash on them. That's a lot of money to play around with and invest in AI, etc. Also, Forecaster's projections tool has given the best match scenario that it most likely goes up in price. And this tool goes deep into the history, studies the most correlated events of Google's past to project what will happen in the future. It's a good tool to have in the toolkit when studying a stock and using it alongside your other tools, like studying the fundamentals, calculating your intrinsic value, and obviously doing your own deep research on various other factors. If you want to use the projections tool and get access to after the full array of data, you can click the link in the description or the pinned comment and get 10% off Forecaster. Okay, and now it is time for us to move on to the stock that was bought the most in the recent quarter of 2025, and that stock is... Okay, study this graph and tell me what you notice. The first thing that stands out to me is that net income crashed in the 2024 financial year from 22 billion to 14 billion, and then of course in 2025 it recovered to the original amount back to 21 bill. And then we look at price, and of course price crashed from $620 to $240. But unlike the net income, the price did not recover. Today it's trading nowhere near close to its high last year. The stock, of course, is UnitedHealth, and this is the stock that super investors bought the most in the recent quarter. What I've just shown you may perhaps be a reason why. Thank you Forecaster for sponsoring this video. If you want to get access to their projections tool and their AI agent and all of the rest, you can click the link in the description or the pinned comment for 10% off.